Hey, this is Matt from InvestiQuant. Today is Tuesday, August 25th, 2020. And this morning we saw the markets gap up 3 of the 4 indices up above the prior day's high, and they have since fallen back down towards prior day's close. The ES is consolidating. The ES is this top left chart right here, consolidating under the open and around the prior day high, prior day closing area. The Russell and the YM have been a bit weaker, and the NASDAQ has been a bit stronger intraday, but the ES is kind of just consolidating here underneath the open, which is near the high of the session from this morning. And what I want to do is take a look at this pattern that we looked at this morning, which was based upon the 2-day RSI given an overbought reading. And I want to take that same indicator and then apply it to the afternoon with a little bit more context around what has happened since the open, since we've got a lot more information now, and then see what that leads to into the close. So I'm going to go into Discover. We're going to look at all 4 instruments, and we're going to use an intraday time-based entry that enters the market at 3 p.m. Eastern Time long. It will exit at 4:15 p.m. Eastern Time. Then I'm going to go into the opening filters, and I'm going to say that we opened above the prior session high like we did this morning. And then in the post-open filters, I'm going to add a little bit of context around what has happened. So we filled the gap, which means we traded back to the prior day's closing price. And currently, we're trading underneath the open. And at 3 p.m., I have no idea if we'll be underneath the open, but we've been underneath the open pretty much the entire session. So I'm going to go ahead and just go with that as our context for what has happened after the market opened. Then I'm going to go into the indicators section, and this is where I'm going to be able to find that overbought RSI reading right here, the overbought oversold category. Day after 2-day RSI is greater than 95, so that's indicating a short-term overbought reading on the RSI indicator. And lastly, I'm just going to say it's above a 200-day moving average so that we are getting this overbought condition in a generally bullish market. Then I can hit view results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when opening above the prior day high after getting a reading of the 2-day RSI being above 95 and above a 200-day moving average. Once that has happened, the market fills its gap and is trading below its open at 3 p.m. Eastern Time. So looking at that type of pattern, we have seen it happen 49 times historically in the ES dating back to 2003. The NASDAQ has 67 samples there. This pattern is not actually applicable to the NASDAQ today. The YM, 41 samples, and 40 in the Russell. Looking at the win rates on these, looks like the ES, 59%, so that one has been favored. NASDAQ's a bit more neutral, 52%. YM looks like it's the strongest of the group at 71%, and Russell a little bit stronger as well at 63%. So 3 of the 4 instruments have favored the long side historically on this pattern going into the close. NASDAQ dead neutral there at 52%. Not a whole lot to read into that. If you look at the equity curves, you do see they are just kind of slanting higher smoothly, with the exception of the YM, which is this orange one, which has a giant drop there at the end. And that looks like that's probably just capturing an outlier in high volatility. So let's see. Yeah, largest losing trade. It had a huge losing trade here within the past quarter, which is making this equity curve look like that. But outside of the outlier, the majority of them are just kind of working their way higher in small increments. And looks like historically it has leaned a little bit to the long side as we approach the close. So that is, again, if trading below the opening print at 3 p.m. Eastern Time, and we will find that out at 3. So hopefully you found that interesting. Good luck the rest of the day, and we will see you tomorrow.